or your news outlet, that would be great. Thanks. Bye.
Well, good afternoon. I'm going to say a few words in English, and after, for the French-speaking people, if any, I will make some comment in French. Maybe some of you were in the IMF press conference at the end of the annual meeting last October. And if some of you were there, they may remember that what I said at this time is the IMF is back. Today you get the proof. When you read the communiqué, each paragraph, or almost each paragraph, let's say the important one, is in one way or another related to IMF work. The IMF is first back as a forecaster, and you may see that the IMF forecasts are the reference. Of course, there are other institutions making forecasts, they're all very good, but the fact is that the IMF forecasts are the reference for the G20. And in paragraph 10 of the document, for instance, you will see that the G20 relies on this assumption, the forecast we have, that growth will resume in 2010 and could go to over 2% at the end of 2010. So that's the framework in which the G20 is working. Of course, those forecasts relies on some hypotheses, and we expect growth to come back in the first semester of 2010 and be as big as 2% at the end of 2010, providing that the right policies are implemented. What are the right policies? The first one is certainly the global stimulus, and I must say that I'm really happy to be the head of an institution which more than 1 year ago, was last year in Davos in January, asked for this global stimulus. At this time, no institution, nobody, was able to see that the crisis will be so deep that it will need a global stimulus. We asked for that, and we have been followed. And that's a very important thing, because I heard a lot of things about the lack of coordination, all these kind of things. In fact, this is the most coordinated stimulus ever. It has never been in our history. Most countries, those having some fiscal room, launching a fiscal stimulus at the same time to face the same crisis. So the problem is really not the lack of coordination, and coordination did take place. Of course, we cannot go along only with stimulus. We need also to work on the regulation of the banking sector, regulation of different non-cooperative jurisdiction or rating agency. All this is in the document, and I think it's very helpful because it will help to rebuild confidence. And everybody understands that this crisis has some technical roots, but also is a crisis of confidence. And the last point, maybe some of you have listened to me during the last week in a written interview or radio or TV. I always say the same thing, which is that the stimulus will not be effective or effective enough if we are not able at the same time to clean up the balance sheets of the bank. And the cleansing of the financial sector is obviously today in the head of all the head of state and government. And I was really, I won't say surprised, but happy to notice that all of them are now saying the same thing. We commit ourselves and we have to clean up the balance sheet of our bank. And that's absolutely essential. All the experience of the IMF is that you never recover before you completed this cleansing of the financial sector. And so I'm really confident when I listen to the head of state and government today that they go back home having in mind that that's the right thing to do. The IMF is also back as a policymaker. And not only it's recognized by the text, when the text says, for instance, in paragraph 6, that this is an unprecedented and concerted fiscal expansion, just explaining what I said before, that as a policymaker, not only as a forecaster, but as a policymaker, the IMF has now recognized. I'm not saying that the different governments of the G20 are going to do all the time what we think is the right thing to do, but at least we are the partner to discuss with and to analyze what kind of policy should be implemented. Now the IMF is also back in terms of work, of course forecast, advise our work, but other kind of work. I'm thinking especially about the surveillance process. And you may, if you have read already the communiqué, you have seen that the surveillance process by the IMF is a central piece of this communiqué and a central piece of what the G20 is relying on. So surveillance, and as a sub-product of the surveillance, early warnings, together with the new FSB, the former FSF, that's something which is totally central to what the G20 wants to do. I said, the head of state and government, during the lunch, or this morning, I don't remember, that I understand they're sometimes upset by the fact that we give early warnings, because early warnings are never good warnings. We don't warn them saying, oh, things are going to be very good. When we warn them, it's because we think, well, we have a risk of materializing of downside risk. We may have things going worse. So, of course, they don't like it. But on the other hand, that's our role, and I think they all understand that even if they're sometimes upset by pessimistic forecasts, or when we say in this part of the world or this part of the world there are some risks, they have to accept it, and that's part of the exchanges between governments and the IMF. And what is very important for me is that it has been clearly affirmed in this clearly stressed in this communiqué that we are asked to monitor the progress in the action plan and on regulation. As I often said, we don't ask, the IMF doesn't ask to be the big regulator. I don't know if we need a big regulator at the global level or rather than at national level or regional level, but even if we need one, I'm not sure, but if we need one, there's no reason for the IMF to be this. We are monitoring what's the rules which are defined by the FSB and then implemented in the countries. And what is important for us is the surveillance process, which makes us able to exert our surveillance and see if the new rules which have been decided are really implemented in the different countries. Because it's very interesting, on an intellectual point of view, to define new rules to fight against pro-cyclicality or things like this, but if it's not correctly implemented in each and every country, at least in each systemic country, then there's no use. So we're a little down the road. The FSB has to define the rules. We're part of this. We have input at the SFB, but they're a leader. And then, when the national government decided to implement it, we come and we have this surveillance attitude. All this shows that the IMF is back. Maybe I forgot something. And the something, of course, is the increase in our resources. The resources of the IMF until now were 250 billion. This amount is going to be tripled, up to 750 billion. The first step of 250, we are already managing it. As you know, we already signed with the Japanese a 100 billion loan. We're discussing with the Europeans. They committed themselves to another 100 billion, so we're discussing how to do it. Have other partners to complete the first tranche of 250. And then will come the second tranche to create this NAB proposed by Tim Geithner, which altogether will increase the resources by 500 billion. 500 billion plus the 250 billion we had already makes how do you say it? Force de frappe, a firepower of 750 billion, which is at the size of what the world may need. You have certainly seen yesterday the move made by Mexico, joining the fund and asking for being the first in the flexible credit line that we created a few weeks ago for an amount which is close to 50 billion. 50 billion is a huge amount, and if we provide this kind of instruments to several countries, we will rapidly use this firepower which has been given to us.